You've made it to Class 8, and this is where everything starts to click. You understand the 3 pillars. You know what life insurance is supposed to do. Now it's time to meet the actual products that do it. Think of this as your product toolkit, the instruments you'll reach for every time you sit across from a client. All life insurance products live in one of 2 families. On one side, term. Think of it like renting. You have coverage for a set period of time, and when that period ends, so does the coverage. On the other side, permanent. Think of it like owning. Your coverage can last your entire life, and many permanent products can build cash value over time. Within the permanent family, we have 3 key products: whole life, universal life, and indexed universal life or IUL. Let's start with term life, the most straightforward product in the toolkit. Simple, affordable, and built for a specific season of life. Term life provides coverage for a specific period, commonly 10, 15, 20, or 30 years. The premium is level, meaning it stays the same for the entire term. If the insured passes away during that period, the death benefit is paid. If the term ends and coverage isn't renewed or converted, it simply expires. No cash value, no permanence, just clean, focused protection. Term is the go-to for clients in high-need, budget-conscious seasons of life. A young couple with a new mortgage. A family with a newborn. Someone who needs maximum coverage for the lowest possible cost right now. The NAICS Life Insurance Buyer's Guide describes term as pure protection, no frills, no buildup, just coverage for the years that matter most. Product 2 is whole life, and the word that defines it is certainty. If your client is someone who needs to know exactly what they're getting, every single year, for the rest of their life, this is their product. Whole life comes with 3 guarantees. 1. A guaranteed level premium that never changes. 2. A guaranteed death benefit that will be paid regardless of when the insured passes away. 3. Guaranteed cash value growth that builds inside the policy every single year. These aren't projections. They're contractual guarantees. And for the right client, that word, guaranteed, is everything. Whole life is best for clients who value certainty over growth potential. They don't want surprises. They want to know exactly what their policy will do, and whole life delivers that promise with ironclad consistency. Now, product 3. This is the one that tends to generate the most questions, the most buzz, and honestly, the most confusion. Indexed Universal Life IUL. Let's clear it up once and for all. IUL is permanent life insurance. It has a death benefit that lasts your lifetime. But here's what makes it unique: the cash value inside the policy can grow based on the performance of a market index, like the S&P 500. And critically, the client is not directly investing in the market. They don't own any stocks. They're credited based on index performance, within certain parameters. Here are the 3 parameters that govern how IUL credits cash value. First, the cap rate. This is the ceiling on how much you can gain in a given period. If the index returns 15% but your cap is 10, you're credited 10. Second, the floor. This is your downside protection. Most IUL floors are 0%, meaning if the market drops 30%, your cash value isn't credited a loss, you simply get 0 for that period. And third, the participation rate. This determines what percentage of the index gain you receive. 100% participation means you get the full index gain up to the cap. These 3 levers, cap, floor, participation, are what define how an IUL performs. And here is something I need you to hear clearly. Never, and I mean never, quote a specific cap rate, floor percentage, or growth projection from memory when speaking with a client. These numbers vary by carrier, by product, and they change. The only place you should ever pull those figures from is a current, official illustration provided by the carrier. This isn't just good practice, it's your professional responsibility. IUL is best for clients who are healthy enough to qualify for coverage, want growth potential beyond what whole life's guaranteed rate offers, and may value living benefits, accelerated death benefit riders that can help if a client faces a chronic or terminal illness. It's a powerful product in the right hands, for the right client. And our 4th product addresses a reality that every agent will encounter. There are clients who need coverage, who deserve coverage, but who can't qualify for traditional underwriting. That's where final expense and guaranteed issue products come in. Final expense and guaranteed issue policies are smaller policies, commonly up to around $25,000 in coverage, designed specifically for older clients or those who can't qualify for traditional underwriting. They typically involve simplified underwriting with just a few health questions, or in some cases, no health questions at all. The application process is intentionally accessible. Here's the one concept with final expense that you absolutely must understand: the graded death benefit. Most of these policies include a waiting period, typically around 2 years from the policy issue date. During that window, if the insured passes away from natural causes, the beneficiary generally receives a return of premiums paid, not the full death benefit. However, if death is accidental, the full benefit is typically paid even during that waiting period. After the waiting period ends, the full death benefit is payable for all causes. The exact terms vary by carrier. Always verify the specific graded period in the product illustration before you present it to a client. Final expense is best for older clients, typically in their 60s, 70s, or beyond, or for anyone who has been declined for traditional coverage due to health history. It's not about wealth accumulation. It's about dignity. It gives families the ability to cover funeral costs, outstanding bills, and final expenses without a financial burden. For the right client, this product is a genuine lifeline. So let's lock in the toolkit. Term: temporary, affordable, season of life protection. Whole life: permanent, guaranteed, certainty for life. IUL: permanent, market-linked growth potential with downside protection. Final expense: accessible coverage for clients traditional underwriting can't serve. 4 products. 4 distinct purposes. 4 different clients. Here's your engagement moment, and I want you to actually think about this before we reveal the answer. New baby. New mortgage. Budget is tight. Client is 29 years old and healthy. Of the 4 products we just covered, which one comes to mind? Take a second. Think through the toolkit. The answer: term life. Maximum coverage for the lowest cost, during the exact season of life when that family needs protection the most. A young, healthy client with a mortgage and a newborn is a textbook term case. Remember, matching the product to the moment is the skill. And you're building it right now.